I've always said that it's the greatest and easiest macro risk-taking environment of all time because you have one macro variable that matters and nothing else really counts.
Yeah, but I think to add a bit of spice to that mix, what happened roughly 2 years ago as well was that the credit creation moved from the central bank balance sheet to the broader economy.
Yeah.
And a lot of people completely missed that. Because if you look at the Fed balance sheet, it's basically flatlining, right? We know the reason why. We have quantitative tightening running in the background. Then you have a couple of countering factors, but the balance sheet is flat. And basically,
the Fed net liquidity measure is flat.
Yeah. Yes, exactly. And therefore, the money created since 2023, all of that credit creation has happened in the private sector and in the treasury deficit, basically. So, of course, if you run a huge deficit and private banks create money by lending out to households, corporates, you're going to see an explosion in liquidity just from another source. So essentially 3 agents in an economy can create a dollar. The Federal Reserve can create a dollar. That's what we've been used to being the key driver. The US Treasury can create a dollar by running a deficit. And a commercial bank can create a dollar by lending out and increasing their leverage. And it's only 2 out of 3 agents that have added liquidity for the past couple of years. And the Fed is not one of those 2. And that, I think, that has caught a lot of people offside.
We looked at this and wrote a lot about it in GMI and Real Vision Pro. It seems that they're trying to move the game when people understand what the game is. So at first it was the balance sheet from 2008 until 2012, 13, 14. Then it became Fed net liquidity, which is all of those measures. And now they've gone to total liquidity, which is really right now being entirely driven by the private sector. But it's still liquidity. And I love the way you put it. There's 3 ways you can create a dollar. You need to keep your eye on all 3 ways. And there's also a certain amount of liquidity that comes from issuing short-end bills as opposed to long-end.